So someone has asked me the other day, what's your target for URA longs? URA is the uranium fund, and people want to know where we're getting it around $20 or $19. What's the target? And the answer to that is there's a longer term target. Let's say it's $30, somewhere around there. But that's not where I'm planning to exit my trades. A swing trader's job is to buy the dips and then get out at the top and wait for fresh dips to buy back into again and ride the sort of staggered wave up of the uptrend in this case, and aim eventually for the overall target, which let's say is $30. We'll have a look at the charts shortly behind me. They're all set up there. But the joy of swing trading is that we can trade the same move multiple times, getting in at the lows, getting out at the highs, back in at a new low, back out at a new high. And as that staggered sort of wave pattern moves higher, we can take maybe 5 or 7 or 10 or 15 trades on the same instrument and make many times more profit than if we just got in at the bottom and closed right at the top days or weeks or even months later. A swing trader can get in and out many, many times on the same trade, same direction, but take much more profit on the way up. Let's have a look at the charts behind me. I'm going to actually just film the screen and show you and point out with my hands on the screen. It's a little bit more personal and interactive, and I think you'll enjoy what you see. We're going to be looking at uranium, URA. Let's have a look. All right, so we're in my new office now. It's still getting set up. I've lost the remote control for this TV. Can you believe it? It's 1,000 Rand, which is about $50. All right, so here's uranium. We were looking to buy uranium all along the bottom here off the support, which is a major support level. I'm not going to go into the details right now, but we were buying at the bottom here and then getting out on rallies, rebuying, getting out on rallies, somewhere near the top, not quite, rebuying at the bottom, getting out at the top of the rally, rebuying at the bottom, until eventually we broke up through here into the next sort of level. Now I had closed the long trade there, so I missed out on a bit, but then we started doing the same thing, buying down at these dips, taking profit. And then eventually when it dropped back down to this original support, I was able to add more to that long position and then get out at the top here. So you see what happened, we rallied up further to make a kind of a new support level here, and that's at around $21. And then I bought the dip down here, added a bit there, got out at the top, and now we're back long again. So you can see it's a kind of a matter of staggering these trades. Once you have an overall direction, which is obviously up, you can get in at the bottom of the pullbacks and take profit at the top of the sort of rallies until we break into a new level. Then you set a new pullback zone, which has now become this level here at the bottom of the pink zone, buying into those dips and potentially even to the next level, not getting back into this green zone here though. So we've got a new support level at this blue zone and potentially a new support level now at the pink zone after having broken up through the sort of green zone above it. So we continue to buy dips on uranium, and every time we hit a resistance level, in this case the trend line, we get out, wait for a pullback, and now we're looking to buy URA again. I've just taken a small position long, allowing for a dip down to the bottom of the pink zone and even the blue zone. And if you kind of zoom out from a bigger perspective, you can see how it's a long trade, but there are staggers downwards all the time, and it's a matter of buying the dips, and that's swing trading for you. And we don't have an immediate target, we've got an overall target. The overall target is much higher up, but it's going to take some time to get there. So we're allowing for these dips down, pullbacks all the time. There's our overall target up there somewhere. That's at around $30. But at the moment, we're buying dips into this level. We still haven't broken out of this broad range. As long as we're trading in there, it's a range trade, buy at the dips, get out at the top, buy at the dips, get out at the top, until we break through there and then move up into these higher levels. We've got this short-term trend line, this one here, to break through. We've broken through the long-term trend line, so that's bullish. And on the dip back down to that long-term trend line, it held, well, a little spike through, but generally it held, and now we're moving up into a new level. So that's swing trading, using supports to buy into dips and rallies to exit until we break into new levels, and then we keep on staggering the trade higher. There's no immediate target. There's a long-term goal, but we're in and out of the trade time and time and time again, and we're profiting multiple times. That's swing trading, and that's why I love it. Well, there you go, that's swing trading. And you can do this on all sorts of instruments. You can do it on currencies. I often do it on currencies, particularly the N pairs. You can do it on gold, you can do it on stocks, you can do it on natural gas, whatever you happen to be trading. It's a really good approach, as long as you've got the overall direction and where your long-term support or resistance levels are and where your targets are. In between that, there's going to be a lot of activity, chopping around, moving up and down, plenty of opportunity to trade. And don't fall prey to FOMO. If you get out of a trade and you miss a little bit of the move up or down, doesn't matter. Often, very often, there'll be another chance to get back into the same trade in the same direction and take more profit. Hope you've enjoyed that. Take care. If you've enjoyed this, please subscribe to this channel and give the video a thumbs up, and I'll see you in the next one.